Good morning and Assalamu alaikum everyone. My name is Aksanur and I am a part of a group number 2. So, I will be introducing you to the stock market that is a crucial component of the financial world. Stock market. The stock market is essentially a marketplace where shares of public listed companies are bought and sold. These allow companies to raise capital by selling shares, and it gives investors an opportunity to buy a stake in these companies. So the main purpose of the stock market is to facilitate these buying and selling process. It provides liquidity, which means investor can easily buy and sell shares, and it open up investment opportunity for anyone interested in owning part of a company. Now let's look at the key people involved and type of stock market. Firstly, shareholders are the people or institution who own one or more shares in a company. By holding shares, they have partial ownership and may even get voting right in some company decisions. There are two types of stock market. Number one is primary market and second one is secondary market. Primary market. This is where companies initially offer their shares to the public, often through an IPO, initial public offering. Secondary market. Here investors buy and sell shares that have already been issued. This is the market most of us think of when we talk about buying and selling stocks, and it's where trading takes place daily. Let's discuss the participants and importance of the stock market. The main participants include investors, brokers, and regulatory bodies. Investor. These can be individual or institution who buy shares with the hope of gaining returns. Brokers. They act as intermediaries licensed to facilitate trades between buyer and seller. Regulatory bodies. Organizations like the SEC oversee the stock market to ensure fairness, transparency, and protection for investors. As for the importance of the stock market, it plays a major role in economic growth, wealth creation, and liquidity. Economic growth. By providing capital to companies, it enables them to grow and expand. Wealth creation. For investors, it offers the chance to earn return on their investment. Liquidity. The stock market ensures that investors can easily buy or sell shares as needed. So the conclusion is that the stock market is a critical part of our economy, providing a platform for investment, growth, and financial security. Thank you.
Assalamu alaikum. I'm Alina Tariq. So, as Aksar tells you about the stock market, its types and importance, now I am going to tell you about the challenges of a stock market. So, on number 1 we have high market volatility due to interest rate changes. The stock market in Pakistan often reacts sharply when the State Bank of Pakistan makes unexpected changes to interest rates. These sudden adjustments can make the market highly unpredictable, causing prices to swing dramatically. Such volatility makes investors nervous, leading to reduced investment and increased uncertainty about the future. Impact of inflation control measures. The State Bank of Pakistan uses interest rate hikes to control inflation, but this often has negative side effects on the stock market. Higher interest rates make borrowing more expensive, which slows down spending and investments by both businesses and consumers. This can lead to lower company profits and, as a result, falling stock prices, making it a tough environment for investors. So, on number 3 we have exchange rate instability. Fluctuations in the value of the Pakistani rupee can create challenges for the stock market. When the currency weakens significantly, it scares off foreign investors because their returns might decrease when converted back to their own currency. This instability introduces additional risk, making both local and foreign investors more hesitant to invest in the market. Reduced market liquidity due to tight monetary policy. To address economic issues like high inflation, the State Bank of Pakistan may tighten monetary policy by raising interest rates. While this helps stabilize the economy, it also means there's less money circulating in the financial system. This lack of liquidity can make it hard for businesses to access funds and for investors to find good investment opportunities, slowing down overall market activity. On last, we have investor confidence issues, which is the most important challenge. Uncertainty around the state bank's policies can hurt investor confidence. When investors are not sure what to expect from the State Bank of Pakistan, they may pull back from investing or avoid the market entirely. This lack of trust can lead to lower trading activity, and as a result, both local and international investors choose safer options instead. Thank you.
Welcome to presentation on overcoming stock market challenges and navigating central bank policies. My name is Iman and I will be guiding you through this informative session. So, I want to talk about the challenges that Alina mentioned earlier. As we all know, the stock market can be unpredictable and it's essential to be prepared to overcome these challenges. Overcoming high market volatility due to interest rate changes. To reduce market volatility, the State Bank of Pakistan could make interest rate changes more gradual and predictable. Clear communication about future policy moves also help investors feel more secure, reducing sharp reaction and creating more stable market environment. Managing the impact of inflation to control measures lessen the negative impact of inflation control. The State Bank of Pakistan could balance interest rate hikes with measures that support economic growth. For instance, it can provide forward guidance to the public, helping investors plan better and minimize panic. The goal is to control inflation without creating too much pressure on the stock market. The State Bank of Pakistan can work on stabilizing the exchange rate by using targeted interventions in the forex market. Additionally, maintaining transparent communication about currency policies can reassure foreign investors by providing a clear economic outlook. The central bank can help minimize currency risk and attract more stable investment flows, increasing market liquidity despite tight monetary policy. During the periods of tight monetary policy, the state bank could introduce temporary liquidity support programs to ensure enough capital remain available in the financial market. These measures would keep business and investors active even when overall economic conditions are challenging, helping to maintain stock market activity. Rebuilding investors' confidence. To boost investors' trust, the State Bank of Pakistan can enhance transparencies and improve communication about its policies and economic goals. Regular update and consistent approach to policy decision will reassure both local and foreign investors.
Assalamu alaikum, this is Ifra Sajid and my presentation is on the benefits of a stock exchange listing. Today I will be discussing the benefits of listing a company on the stock exchange. There are four key benefits of a stock exchange. First and foremost is access to capital. Listing allows company to raise significant funds by issuing shares to the public. This capital can be used for expansion, research and development or to pay off debts. Second is visibility. Being listed enhances a company's public profile, attracting investors, customers, and potential business partners, which can lead to growth opportunities. Another significant benefit is equity for shareholders. Stock exchange listing provides liquidity, allowing shareholders to buy or sell shares easily, making the company's stock more attractive. Last is valuation and market confidence. A listed company's stock price is a real-time indicator of its value. This transparency boosts investor confidence, making it easier to raise funds in the future. Now I will briefly explain the components of stock exchange. So number one component is investors. Investors are individuals, banks, or financial institutions who buy shares. They do this to grow their money, earn dividends, or take advantage of rising stock prices. Some investors are short-term traders while others hold stocks for a long time. Brokers. Brokers act as intermediaries between buyers and sellers in the stock market. They don't own the stocks themselves but help facilitate trade on behalf of their clients, earning commissions for their services. Retail and institutional investors rely on brokers to execute trades efficiently. Third component of stock exchange, dealers. Dealers, on the other hand, play a different role. They buy and sell securities for their own account, creating liquidity in the market. Unlike brokers, they take ownership of the securities. So now here I am concluding our presentation. The stock market is a vital financial platform where companies raise capital and investors gain opportunities to grow their wealth. It operates with key participants like shareholders, brokers, dealers, and investors, each playing distinct roles. Companies benefit from stock exchange listing by gaining access to capital, increasing visibility, and enhancing shareholder liquidity. However, factors such as interest rate changes, inflation control measures, exchange rate instability, and investor confidence significantly influence market dynamics, particularly in Pakistan. Addressing these challenges through strategic policies and effective communication can create a more stable, attractive investment environment.